need to avoid. I've actually found about 12 things that entrepreneurs oftentimes do wrong with building business credit and business credit cards and managing them. That you need to avoid these. If you want to build business credit quickly, if you want to have a strong business credit profile and score that lenders and credit issuers want to see to lend you more money, to give you optimal financing, getting higher approval amounts, more approvals, better terms, then you need to really focus on these things, because even if you have your business credit card, you have to know how to avoid these pitfalls to manage them the best that you can, because that's really the key to more effectively building business credit. The better you could do that, the more financing you're going to get for your business, the easier it is to get the financing you want, the better terms you're going to get. I mean, everything falls in line if you avoid these 12 pitfalls. So let's dive in and talk about the 12 most common business credit card and business credit building pitfalls that you need to avoid. So number one is mixing business and personal expenses. And this is a huge problem on both sides of the coin. Here's why. First of all, 30% of your FICO score is based on utilization. So that means nearly an entire third of your entire consumer credit score is based on utilization. So if you're trying to use personal credit cards and putting business expenses on them, it's a massive no-no. Because when you do that, then you increase the balance on those cards and you exponentially decrease your consumer credit score. Then you have problems using your consumer credit score for personal loans and personal credit cards and mortgages, but also business loans in the area that you need to use that personal credit for business qualification purposes, right? You don't need to use personal credit to get business credit cards. I can teach you how to do that just using your business credit profile, but you're still going to need SBA loans and other kind of financing that's going to look at your personal credit. So you need to keep business expenses off of any credit card that is reporting to the consumer credit reporting agencies. Now, the other thing is that this creates all kinds of problems if you're ever audited by the IRS, for your accountant, amongst many other different issues. So you need to make sure that you have business credit cards that report to the business credit reporting agencies. You have consumer credit cards that report to the consumer credit reporting agencies, and you use each one of these the right way accordingly. Don't use personal credit cards to pay business expenses. Don't use business credit cards to pay personal expenses, because again, it creates an accounting nightmare. There's all kinds of issues to audits, the IRS. And again, if you're using business expenses on personal credit cards, you're really damaging your personal credit scores. So you need to make sure that you avoid that. Issue number one of 12 I'm going to cover. Now, number two, personally guaranteeing cards without understanding the risk and taking on completely unnecessary risk. Look, there is financing you need to provide a personal guarantee for. SBA loan is an example. And there's all kinds of financing and credit you do not need to be personally liable for. You do not need to provide a personal guarantee. This is so important of a topic, especially for me, because I personally guaranteed a business debt when I owned my mortgage company. Mortgage industry collapsed. Nothing to do with me, right? And then as a result of that, the bank came and literally cleaned out, took all my personal assets, took all the money from my bank accounts. I saw it happen firsthand. I want to avoid this on your end. I want you to avoid this. So how do we do it? Well, when it comes to business credit cards, stop using personal guarantees. You don't really need them, right? If you build business credit, every type of credit card that you can imagine, from Universal, Visa, MasterCards, all the way down to credit cards at stores, fuel credit cards, it all can be obtained without personal guarantee, without personal liability. So avoid this mistake. Number two, stop guaranteeing credit cards. Now, there is an exception here. Let's say that you want a bunch of funding fast and you have good credit, but you don't have revenue or you don't have collateral. Well, then there's programs like Credit Line Hybrid that could work really well for you. You use personal guarantees to get approved, but you get like $100,000, $150,000 in 0% rates. That's an exception. There's a reason to use it. But in almost any other case, you don't want to provide a personal guarantee for credit cards. Just by building your business credit, you can actually get those credit cards without personal guarantees. That lets you save your personal guarantee to strategically use it for cases that you need it, like SBA loans. By the way, Mike South is in the house, coming in from Lake of the Ozarks ice cream boat. I love that. I don't know what's going on with Mike today. He's on an ice cream boat. That sounds awesome. So number three, maxing out credit card limits. This is an absolute no-no for anything that reports on your consumer credit report. Look, I've seen over 10,000 credit reports in my life. And I can tell you that I have seen a FICO consumer credit score drop by over 100 points because somebody had a balance increase of $100. True story. Increase the balance by $100 and that dropped their score 100 points, could not even get them a mortgage until they paid off the credit card and we actually had to do a rapid rescore to get the scores back up. Now, don't get me wrong. Their limits weren't very high. So their proportion of balance to limit was increased at an unreasonable amount because of that $100, because their limits were low. But the point of the matter is that a third of your FICO score is made up of utilization. So you never want to keep high balances on your credit cards. You should keep balances on credit cards as low as you possibly can. Now, there's a rumor that you should keep limits below 30%. It's nonsense. It's completely untrue. There's no such thing as above 30%, you're not good, and below 30% utilization, you are. That's completely made up, okay? And I learned that from John Alzheimer, who's one of the foremost experts on FICO scoring. The reality is balances should be really as close to zero, less than 1% as you can keep them. Anything above that, you're hurting your score, and the higher those balances in relation to your limits are, the more you are actually damaging your score. Okay, so the bottom line is with consumer credit cards, you need to pay those things down. You need to keep your balances low. It's why you shouldn't be using personal credit cards to pay business expenses. Now, on the business side, you've got a little bit more leeway. The main credit scores in the business world don't look at utilization. Okay, Experian does, and Telescore does take into account utilization. It could be upwards of like 10% of the total score. Okay, but Equifax and Dun & Bradstreet, it doesn't. But each one of the major business credit reporting agencies has 5 different scores. And 4 of those 5 scores do take into account sometimes utilization. So what I mean by that is that if you are overutilizing business credit cards, your main scores are fine. You're still okay. It's no big deal. They're based on payment history. But the other secondary scores that the bureaus offer to show signs of your financial stability, if lenders will see those, they're going to be affected by you carrying high balances. So we want to try to keep our balances low on business cards. Not essential, but we want to try. But we definitely need to keep them low on consumer credit cards because that is essential because a third of our total FICO score is based on that utilization. Number 4, making only the minimum payment. Okay, we don't want to do that because that's what accumulates high balances, right? We want to pay off as much as we put on those cards if we could potentially do so. If we pay off everything we put on the card, we don't even pay any interest if we do it within that statement period. So first of all, that keeps interest from accruing. Secondly is that your secondary business credit scores from each bureau are adversely affected when you're carrying these balances and you're not paying them down. So we want to avoid just paying minimum payments because it accumulates these balances, which can adversely affect our score. And we don't want lenders, credit issuers, and the bureaus to see that we're accumulating high balances and then only paying the minimum we can. They want to see that we're accumulating a balance and paying it off, balance and paying it off. That's the person that a credit card issuer wants to lend to. They want to issue credit to. If you get a credit card and you don't even use it for anything and spend very little, well, you're not somebody a credit card issuer really wants to give money to. And if you're somebody that's accumulating high balances and then keeping them and paying the minimum amount you can, it's a pretty big risk. You're not somebody credit card issuers want to lend money to. But again, if you're in this flow of balance acquiring, you're acquiring a balance and you're paying it off, that's what credit issuers want to see. And when they see that on your business credit reports, that is when they're more inclined to give you approvals at very high limits. And what I mean by that is $30,000, $40,000, $50,000 limits on each individual card. So that's really the key to getting higher approvals. Now, one M. Ari DeBoer, did not pronounce that correctly, but greetings, Kurt Davis of Debonair Productions here. Thank you very much. Come on, Debonair. I pronounced it correctly. I got it. So thanks for coming in. Thanks for coming in, Kurt Davis of Debonair Productions. I appreciate that. Debonair Productions. Thanks for coming in and saying hi. By the way, if you're just coming in, give me your company name and I'll give you a shout out right here on the stream. Okay, so next is missing payments altogether or making late payments. This is the most important of the 12. Business credit scores are primarily based on one factor, how you pay your bills. Consumer credit, you could be 30 days late and it doesn't hurt your score. But in the business credit world, 1 day late hurts your scores. It's called DBT, days beyond terms. So the further you pay beyond the term date you're supposed to pay, the lower and the more it adversely affects your score. So if you're going to be late, don't be very late because the later you are, the more it's going to hurt you. But you really don't want to be late at all. As a matter of fact, you want to do the opposite. As soon as you can pay that bill, you want to pay it as soon as you can. Now, the item has to ship first. Otherwise, it counts as a cash transaction and will never show on your credit. So if I go to Granger and I buy $500 worth of stuff and Granger, and then I go to Granger and I immediately pay that bill, it will not count as credit. It will not show on my business credit reports. But if I let Granger ship my items, then I pay the bill, then it would show as an early payment. It would show that I'm paying before the due date, before the even statement date. And the earlier I pay it, the higher the score. So if we look at the Paydex score, it's 0, the lowest score, 100's the highest, right? 80 Paydex score means we pay our bills on time. It's literally what it means. But an 85, a 90, a 95 means we're paying the bill very early. So the earlier we pay the bill, the higher our credit score. Why does that matter? Because lenders and credit issuers look at our business credit scores to determine the interest rates that we should pay. So if we want to get low interest rates and low payments, we have to have good scores. And the key to good scores is paying those bills as early as we can. Never pay late. Now, what happens if you are going to pay late? Well, that's when this weighted score comes into effect. So weighted score, for example, with Dun & Bradstreet's Paydex score, a weighted score means the higher the limit on the account, the more damage it will cause to your credit scores if you pay it late. So if I have a $1,000 limit credit card and a $10,000 limit credit card, and I had to go late on one of those, I would want to go late on the $1,000 credit card, the lowest limit, because that would have the least impact to my actual business credit score. So don't ever pay late. Pay as early as you can. Think about this. And the consumer FICO score is a mess. Like if we try to fix one thing, we hurt another. So I try to improve my credit mix by getting new credit, but then I have inquiries, which hurts my inquiry aspect of my credit report, right? So if you think about this, like I need to have positive payment history on there. I need to have a mortgage on there, and I need to have a car loan. But the minute I get a mortgage, it can lower my credit score 100 points because like I get a loan and I owe what that loan was lent for, right? 1 to 2 years, it can adversely affect my score. Consumer FICO score is a mess. When you try to fix one aspect of the score, you literally damage another. But business credit scores, we are so blessed. The primary scores are based on just one factor, how we pay our bills. If we're paying our bills late, it's going to be a problem. Our score is going to be lower. We're going to pay higher interest rates. It's going to be harder for us to get the approvals that we want. But if we're paying our bills on time or early, and the earlier we pay them, the higher our score, the opposite. The better interest rates we get, the more approvals we get. So you have to make sure that you are paying your bills on time or early. That is my tip number 5, is to not make late payments and not miss payments. Now, number 6, applying for too many credit cards at once. This is an issue on the consumer credit card side. If you're getting anything that puts an inquiry on your consumer credit report, even if it's a business credit card, if it results in an inquiry on your credit report, it's going to be a problem. It's going to be more of a problem if you didn't get the credit card. A lot of people don't understand how this part of the consumer FICO score works. So first of all, it takes into account how much credit you're applying for. If I get a credit card and there's an inquiry on my credit report, I'm probably okay. It's not going to maybe even lower my score by a point. But if I get 3, 4, 5 credit cards and I put 3, 4, 5 inquiries for credit cards on my credit report at the same time, then it's going to adversely affect my credit. Now, if I applied 5 applications and I put 5 inquiries on there for credit cards and I got no new credit on my credit report, now it's going to have an even more significant impact on my adverse impact on my credit score. So apply for credit cards. If you're going to put any inquiry on your consumer credit report, you really should be applying for credit cards you're very confident that you're going to get. Because if you apply and you don't get it, it's going to hurt your score. And you don't want to keep going and applying for more and more credit cards to try to get approved. That applying for multiple credit cards is going to hurt your score. And then the more cards you apply for that you don't get approved for, that even hurts your score even more. Now, in the business credit world, not as big of a deal, right? Doesn't matter. I can apply for 5 credit cards, 10 credit cards at the same time on my business credit report, and I'm fine. Doesn't make a difference. Doesn't even adversely affect my score. But you want to make sure that any inquiries you're putting on your consumer credit reports, that's what you want to keep an eye on, because that could really adversely affect your score as well. And by the way, we have Cal Traps in Los Angeles is in the house. Carlos, what's up, man? Thank you for coming in and saying hello. Dizzy, what is up? Thank you for coming in and saying hello as well. Melissa's in the house with Sell Pro Now Capital, LLC. Melissa, hello. How are you doing? I'm always learning so much with your teachings. Thank you very much, Melissa. I appreciate you saying that as well. And we have El Proco in the house. If your business credit score is low for missed payments, would it be easier to rebuild credit by starting a new company or get back on track with the payments? It's a great question. I love this question. I'm going to pull this up right now. So we've got a question here, and the question is we got late payments. What do we do? Well, this is a great, even if you don't have late payments, this is going to be great advice for you. Get as many freaking accounts on your business credit reports as you can get, period. That's it. The key to offset a few late payments is to add a lot of on-time payments. So if I were in this situation, there's two things I would do. First of all, I would look at the account that has the late payments. Does that account have a lot of on-time payments and then some late payments? Or are most of the payments on that account late? If most of the payments on that account are late, I'm going to dispute it with the bureau that it's reported to. Dun & Bradstreet, Equifax, Experian. I'm going to dispute it and see if they remove it. At the same time, I'm going to get as many accounts as I can added to my business credit. I'm going to get approved for as many accounts as I can that report to the business credit reporting agencies. And then I'm going to pay them on time or early. And then those on time or early payments will help offset the damage. Keep in mind, for business credit scores, the damage is more significant the more recent the late payments are. So if I've got a late payment from 90 days ago, and then I start adding a bunch of on-time payments now, those on-time payments now will outweigh the 90-day-old late. So the key here is to dispute and remove the negative. And then also key is to add as many positive as we can, because the recent positive accounts will offset that damage from the negative. So hopefully that helps y'all. Derek Harper's in the house. Derek Harper's one of my favorite people ever in the world. Derek Harper's in the house. Good day, my good friend. It's good to see you. Thanks for tuning in. And okay, Derek's giving me fire emojis. I mean, Derek Harper, if you don't know Derek, he is like the king of financial advice overall. Does so many cool things, including the fact that the smartest guy I've ever met in the consumer credit space. So really honored that you're here, Derek. Thanks for coming in. Okay, so now, applying for too many credit cards at once. The next thing is ignoring the fine print. We have to look at fees. We have to look at APR. We have to look at rates. There's cards like American Express cards that may charge you $500 one-time fee, and it may or a $500 annual fee. So you have to know about those things. You have to take into account the interest rates. You have to take into account the fees, and that's what an APR will tell you. It's an overall look at all fees involved in that account. 0% sounds really good, but I can't tell you how many people come to me where their 0% expired and now their payments shoot up and they're paying like 20-something% interest. So if you get a 0% period, like what is the interest actually going to be after that 0% period is done? So looking at fees, looking at the rates, looking at what happens after 0% expires, looking at the APR, and then also the fine print, you should look at the other benefits of the card. Do you get double points on rideshare? And do you do a lot of rideshare? Do you get double points on groceries? And you use a lot of groceries for the business. Do you get quadruple points for fuel? Like, what you want to get credit cards that actually have incentives and promos and benefits for what you want to do. I travel a lot. I stay at Marriott hotels and I fly American Airlines. So the major credit cards I keep in my wallet are giving me a lot of points for airline travel with American Airlines and for Marriott points. And this allows me to travel and get upgraded to suites and upgraded to first class. And it also allows me to be able to get a lot of travel for free. What is important to you? Look at these credit card terms and make sure you're going with the ones that give you the best benefits for whatever it is that you're really trying to accomplish, right? And that is where it comes down to the fine print. But then that brings me to really another point, which is using rewards cards without a strategy is another problem. But I'll talk about that in just a minute. So next, number 8 on our list is not monitoring account activity for errors and fraud. Look, fraud's everywhere. And you don't want to have people fraudulently using your credit card and doing things that are going to adversely affect your credit scores. This is a super simple one for you. All you have to do is regularly look at your consumer and your commercial credit reports. Business credit reports, you can go to creditsuite.com/monitoring. NAV is like $50 a month. And then you can get like your consumer and your commercial credit scores. You can even, with NAV's Prime program, you can even actually get 2 accounts on your business credit reports. That's pretty cool. And then put it on your calendar once a month. Just check your credit scores. Just check your credit profiles. Make sure everything is good. Make sure that nothing is happening there that you don't know, or nothing is happening in there that shouldn't be happening. Look at those credit reports to make sure your company information is correct. It's up to date. It's accurate. Your NIAX code, your address, your phone number, that can all have an adverse impact on your credit scores. And then, of course, make sure no new accounts are added that you don't know about. And there's no derogatory items like late payments that you didn't know about, okay? So all of those things are very important. Make sure that all you have to do is monitor your reports once a month and you're in good shape. Number 9 of 12 pieces of advice to basically avoid these pitfalls, to have the best business credit scores and profiles and have lenders and credit issuers chasing you to give you money. Number 9 is using rewards points without a strategy. I had somebody on this live stream the other day. They are literally using their Amex card for purchases. They're using the cash incentive. They're taking the cash back. The cash they're getting back from the American Express usage of the credit card. They're buying silver bullion is what they're doing. They're buying silver with it. And then what they're doing is they're using the silver as they accumulate it to basically liquidate that and to buy other businesses. That's a freaking great strategy, right? What is your strategy? Do you have one? I told you mine. I use American Airlines. I use Marriott. So I'm accumulating points in those areas, and then that gets me upgraded to suites. I like it. I like to go to Spain to run with the Bulls like we did last year. And I like to fly first class without having to pay for it. That's pretty cool, right? So again, that's for me. I'm actually using credit cards to give me the best rewards back in incentive points. You should be doing the same thing. What do you buy? Do you buy fuel? Do you buy hotels? Do you buy airline? Do you buy office supplies? What do you do? Ride sharing. There's credit cards that have all different kind of incentives for all those kind of things, and that's what you want to use them for. Look, if there's credit cards like I think one of the Brex cards has like 8 points for every dollar you spend on ride share. So you know what? I'm going to get that credit card. And I'm going to plug that credit card into my Lyft and my Uber apps. That's it. I'm going to use that credit card for that because I get 8 times more than I would get with anybody else. So you don't have to use one credit card for all your spending. Spread them out. If you have a credit card that gives you discounts on office supplies, use that for office supplies. If you have another that's good for hotels, use it for hotels. Another for airlines, use it for airlines. Another one for rideshare, use it for rideshare. So come in with a strategy. When you're getting these credit cards, make sure you're making the best use of these rewards points and have a specific strategy of what you're going to do and how you're going to do it. What are you going to do with those points you're accumulating? Because that is a smart strategy. And again, some credit cards give you 1, 2, even 3% cash back. Think about that. What is your profit margin right now for your company? You could add 1, 2, 3% to your profit margin just by using that credit card for a lot of your stuff, like even payroll. Okay, I literally have a buddy in the consumer credit space. He uses his credit card for payroll, and then he accumulates points, and every year he takes his family on multiple 100% free vacations from the points he actually accumulates just because he puts his payroll on a credit card. This is specific strategies of using cash back and points to be able to grow your business wisely. So make sure you don't come into this without a strategy. Have a specific strategy to use those cards, to use those points. And by the way, we have Electrical Pro Company and is in the house, El Pro Co. I love that. That's El Pro Co is short for Electrical Pro Company. And thank you very much, El Pro Co, for coming in and visiting us. Carlos, thank you for the information, learning a lot. I appreciate that, Carlos. Okay, number 10, not taking advantage of the 0% APR. Look, a lot of these credit cards, the benefit is that you get 0% APR for 6 to 18 months. So what you want to do is you want to wisely use those credit cards when you're starting your business or when you're actually going to make a pretty major purchase. I want to come in and use that 0% when I need the payments to be the lowest I can get. I'm not going to go get a credit card at 0% just to get the credit card. Never, ever would I do that. What I'm going to do is wait until I have a major purchase. Then I'm going to get that 0% card and put that major purchase on there, giving me 18 months to pay no interest on that account. Okay. So use APRs of 0% strategically. Use those and get those cards when you're actually going to use the money to do something like launch a brand new business or invest in something that you especially need some time to lapse to get your rate of return. If I run Facebook ads right now, our cycle for our selling cycle is about 90 days. So that means if I put $10,000 into Facebook ads today, I might not get my money back from that 10K for 90 days. That's a good opportunity to use 0%. So maybe I'm testing Facebook ads, it's working well, I'm increasing my spend, and I want to really ramp up and I spend a lot more money. Well, I want to get a 0% card because then I can get my return and I'm paying 0% while I'm waiting for that money to come back in. So this is a good way to be able to use 0%, is whatever you're going to buy, if there's a time period where you're going to get your ROI, your return on investment, use those 0% cards then, because then you can spend the money, pay 0% interest, and then get your return and then pay off the actual balances. So these are several strategies that can work for you to actually take advantage of the 0% APRs. And that brings me to number 11 on the list, which is assuming all business credit cards report to business credit reporting agencies. 90% don't. 90. 90% of the credit cards you're going to get for your business do not report to a business credit reporting agency, which means 90% of the credit cards that you are getting, you are not getting credit for. Lenders are not saying that you're using them. Credit card issuers are not saying that you're using them. I see this all the time. It's probably one of the biggest 3 mistakes that I see business owners make. Business owner comes to me and says, oh my gosh, I'm trying to get X and my bank denied me. They pulled my credit line. These bad things happen because they said that my business credit's not established. How can that be? I spend all of this money every month, and we look at their business credit report and there's nothing there. And they're like, how's that possible? I spend money with this company and this company and this company and this company. Yeah, but none of them are reporting the payments to a business credit reporting agency. You see, I can walk into Target right now, and when I check out, they say, do you want 20% off to get the Target credit card? And I say, yes. And then I know as a consumer, I know that credit card is going to show up on my consumer credit reports. I know it. But the business world's the opposite. Like, you have to strategically build business credit. You have to ask every credit card issuer and every lender before you get approved or before you apply, who do you report my payments to? Look, in a lot of cases, there's a revenue lending lender that does not report your payments at all. And there's another revenue lending lender that reports your payments to Dun & Bradstreet. If I have 2 options, I'm going to choose the option of the reporting agency that reports my payments to a business credit reporting agency. That's what I'm going to do. Okay. Same with credit cards. So I always ask, I never, ever, ever get a credit card. I never, ever, ever get a loan without asking them, do you report my timely payments? I don't want to say, do you report credit to Dun & Bradstreet? They'll say, yeah. And maybe they'll report a collection if I default, but not my timely payments. If I'm making timely payments, you report my payment history to a business credit reporting agency. Who do you report it to? I don't want anybody that reports to consumer credit, anybody for my business. And at best case, I want to find that it reports to the business credit reporting agencies. Now I'm getting credit for my spending. Now other lenders see it, other credit card issuers see it. They see a lot of people are giving me credit, that I'm using that credit, I'm using that money. Then they are way more inclined to lend you money. So if you want more approvals, you need to do this. You need to make sure that you are consciously getting business credit cards that report to a business credit reporting agency, because that's going to establish this vast history for you. What does that do? The bigger the history you have, the more approvals you're going to get. But here's the other thing. This is what I found. 60,000 business owners have helped build business credit. It's one of the most important tips I'm going to give you. The more accounts you have on a business credit report, the higher the recommendation of credit is from the bureaus. The bureaus tell lenders, they tell credit issuers how much money you should be lent, how much money you should be given in a credit card. They have a recommendation to the lenders. The more accounts on a business credit report, the higher the recommendation is. I can pull up one right now and show you somebody with a $724,000 recommendation, meaning the bureaus are telling lenders to lend them $724,000. I can show credit reports right now that have a $1,000 limit, where the bureaus are saying only lend them $1,000. You don't want to be the person that the bureaus are saying only lend $1,000 to. You want to be the person that the bureaus are telling lenders lend $724,000 to. You only do that by accumulating more accounts on your business credit reports. So ask where the loan or credit card you're going to get and apply for reports, and try to only get business credit cards and business loans and lines of credit that report to a business credit reporting agency. And that brings me to number 12 on my list. Overlooking high annual fees that outweigh the benefits. Look, there's a lot of shiny objects out there. I can stay in the American Airlines lounge. I can stay in the Air American Express lounge. I can get this and cash back and points and rewards. But sometimes the fees are just not worth it. The interest rate is way higher on that credit card. Like I said, there's American Express cards that have $500 annual fee. So guess what? If I never travel, and the main benefit is that I get to stay in the American Express lounge at the airport, well, that doesn't do anything for me. I'm not going to pay $500 unless I'm getting the benefit of those actual getting benefit that outweighs the $500. So with any kind of credit card you're getting that has an annual fee, make sure that the benefits that you are going to get significantly outweigh the fee that you are paying, or it is not worth it to make sure that you get that actual credit card. Okay, so let's recap these 12. I'm not going to spend a lot of time. I'm going to spend maybe 3 minutes going through them. Number 1, don't mix personal and business expenses. Personal expenses stay on personal credit cards. Business expenses stay on business credit cards. Number 2, don't personally guarantee credit cards unless you want to get like 50, 100, 150,000 in credit card stacking funding. If you don't want to do that, then stop using inquiries for business credit cards. 100% of the business credit cards that you want, you can get using your business credit profile to qualify and not your consumer credit profile. Number 3, maxing out credit limits. Doesn't really matter a lot in the business space. Some of your secondary credit scores are affected, but your primary credit scores aren't. But consumer credit, 30% of your score is based on this. So keep your balances as low as you possibly can. Number 4, don't just make minimum payments. Lenders and credit issuers want to see this wave of you're accumulating balances and paying it off, accumulating balances and paying it off. So make sure you accumulate balances and pay it off. That's what they're really looking for. Number 5 on the list, making late payments. Remember, one day late hurts you in the business credit world. So you need to make sure that you're always paying your bills on time or early to have the best scores. Number 6, applying for too many credit cards at once. Doesn't apply in the business world. We don't care. Get as many as you want. But in the consumer world, it will hurt your inquiry aspect of your credit bureau, especially if you're applying for credit cards that you're not getting approved for. So only apply for credit using your consumer credit reports that you know you're going to get, and limit how much of that credit you're applying for at one time. In the business world, it's fine. You're not going to be adversely affected here. Number 7 on the list, ignoring the fine print, the fees, the rates, the charges. We need to know what our APR is, what our annual fee is, if there is an annual fee, what our actual interest rate is going to be. If 0% expires, what's our interest rate going to be? We want to know all of these things. Number 8 on the list, not monitoring your credit reports. Okay, go to creditsuite.com/monitoring. Get set up with NAV. And when you get set up with NAV, you get consumer and commercial credit reports, and you can actually get 2 items or 2 positive trades on your business credit reports. Okay, on top of that, you want to go to number 9, which is using rewards points strategically. Okay, we don't want to just go get rewards points that we're not going to use, or that don't make a benefit for us, or get credit cards that don't have rewards we're going to use. Don't go into it without a strategy. Make sure that you're getting credit cards that give you the rewards on things you're actually going to spend money on and things that you're actually going to use. Number 10, take advantage of 0%. Don't ignore this. You don't want to not take advantage of 0% cards. If you're going to get 0% cards, strategically do it in a time where you're starting a business or going to make a major purchase to keep those payments as low as possible. Number 11 on the list, assuming all credit cards report to the business credit reporting agencies. It's not true. 90% of them don't. So you need to ask lenders and credit issuers before you apply where they report the payments to get payments that report to the business credit reporting agencies. And number 12 on the list is overlooking high annual fees that outweigh the benefits. We don't want to pay a high annual fee credit card on a credit card where we're not getting benefits that outweigh the actual fee that we're paying. And that's it. 12 common pitfalls that business owners fall into using business credit cards and how you can avoid all 12 of them. If you want the fastest way to build business credit, go to creditsuite.com/EIN. If you got value from this training, make sure you smash the like button and make sure you subscribe, because this is all we talk about, is how you can get the best